Hello and welcome to the closing beat, everybody. How are we doing today? Glad to be back. Happy to be here. Thank you for your patience there while we were gone. Me and Eric attending a conference, like 4 advisors and all that good stuff. So it was fun. Learned a lot, but learned a lot of what not to do because that just doesn't fit our jam there. Also, it is officially summertime here, right? So all is good over there?
Actually, yes.
That is good, okay. It's officially summertime here, so if you hear some rain coming through, big storms are brewing up here. But all good. Everything seems to be working, so we're happy to be here. Our Wine and Wealth, actually, which will be tonight at 8 o'clock. I didn't know if we were going to be back or not, so it was pre-recorded and everything. But we're going to talk about the debt ceiling, wow, that was a good one. How it all works and how it's going to play out. And what we're actually going to do is approach it from an analyst point of view, which is non-biased, none of the political stuff. We'll go through how the market's actually going to respond. 2 base cases. We'll drill down and figure out what to expect from there. So if you're a client and you want to join us tonight, that'll be up at probably sooner than 8 o'clock. We'll just get that posted so you can start digesting that one there. Last week, we actually did a great class on rental properties and your tax deductions. We went down by the kind of rental property you have to talk about what's available to you there, and not too bad. Let's get right into it here today. The Nvidia, I mean, what else is there to talk about? The Nvidia response confirms that I'll use a quote, AI is now in full throttle. Where is that quote from? Anybody know where that quote is from? The actual words, AI is now in full throttle. The CEO of Nvidia said that, not yesterday, in 2020. So I'm really going to make a point here. AI is now more popular than Bitcoin, NFTs, meme stocks, pot stocks, 3D stocks, SPACs, the .com nastiness there, and Dutch tulips. So if AI was in full throttle in 2020, what do you call it now? You call it the masses starting to figure out and chase these stocks here. Very, very different. Now, what happens and what happened when you chased your meme stocks, your pot stocks? We weren't around for the Dutch tulip craze there, but that's the most famous one, I think. What happened when you chased Bitcoin? What happened when you bought an NFT? 3D stocks, what happened there? I'm not saying that AI is going to be one of those. I'm saying that currently people are chasing it because it's in the news. It's the headline. It's the big focus over the last couple months. It is the #1 most searched term in relative to stock picks this year. And so I'm just saying it's way overhyped and way overpriced. Don't chase it. It's like the housing market last year, right? Also, before I move on, can you tell me, because I'm going to get this question, I've been getting it all day, time to buy Nvidia, right? Oh my God, these guys are killing it. Can you tell me how they profit from AI? What is it specifically that they do? I didn't know they were an AI company. They're not an AI company. How do they benefit from that? And what percentage of their revenues will come from the growth in AI? It's a lot, I'm not going to argue with you, but we tend to see a name and think, oh my God, AI and that stock, it's doing well, let's go in that stock. Be very, very careful when you chase the hype. You can believe in the future, but don't chase the hype. Great example was Crocs. I'll never forget this. The shoes, the plastic, what is it, rubber shoes that you wear? When Crocs came out, remember the IPO? Go back and look at it. Blast it off, man, they're going to sell the devil out of these shoes. How much is it worth today? And this is not, this is not anything new, but how much was it worth when you started doing that, or after all the hype was there? Turned out to be fine. It's worth $100 and something today. So not arguing with the future, I'm arguing with the hype during that point where you likely got yourself in a little bit of trouble. All right, moving on. There's Crocs for you, by the way. If we look at the S&P here, Fitch says that the U.S. is now on watch for a possible credit downgrade. On tonight's Jazz After Dark, I will actually lay out for you why that's just a headline that is, there's extremely little likelihood given how things are progressing right now and the cash that the Treasury has, that there would be a downgrade there. There wouldn't be a downgrade because of missed debt payments. There could be a downgrade because of political issues there, right, where the political divisiveness is just so far-fetched right now. But we'll see what happens there. Good news out of Washington, they say, well, besides them going home. They say, we are now tens of billions of dollars apart, which is a lot, but it's really nothing. Right? Tens of billions of dollars apart, granted, or given what they're trying to argue here, the debt ceiling, the size of that, that means they're getting close. So it's good news, and it's also nothing at the same time. A fun little thing to share with you before we get into this here is, here's your debt ceiling history. This is not mine. Goldman Sachs put this together for us. I hope it's legible for you. Take a look at what's going on. You can look through the details, and if you're a research member, of course, I posted this for you in probably a higher resolution. But you're welcome to check it out. What I'd like to point out in the meantime here is, here's your debt ceiling way back. Look at the parabolic raising of the debt ceiling. So, yeah, here and there have been debates and sort of stalemates and stuff as far as raising the debt ceiling, which, by the way, I'll cover that in Jazz After Dark tonight for you guys. Everything's debt ceiling. So we'll talk about, like, why is this an issue? Why will the debt ceiling not be abolished? Why will they not just infinitely raise it to, like, quadrillions of dollars? We'll go over all those details so that you know the logistics of how Congress has to behave and actually what the Constitution says. So if you want to sound smart in front of your friends, check out Jazz After Dark tonight. But my scary moment is this parabolic rise in the debt ceiling. We're talking about raising it again. That is a pretty scary, scary thing there. So what do we talk about when a stock does that? What happens every time a stock goes parabolic or climactic or whatever you want to call it, gets super extended too far, too fast? Every single time, doesn't matter the stock, the commodity, the mutual fund, the ETF, it's all the same. The currency, it always pulls back. I worry about that because it is one of those, I believe it was Fibonacci that figured this out, but it's one of those things where parabolic rises, that rate of change cannot continue and will not continue. Kind of like Nvidia's revenues there and their guidance, but we'll talk about that in a second. In other news, the Fed minutes, I took a look at those, looked through those. We are all but certain that now June is just going to be a pause. There'll be no rate hike in June, given the data that they had at the time of the Fed minutes. Remember, that happened back in May 2nd and 3rd, and so that now is just coming out. So it's like a lagging kind of a report there. All right, so going over to, real quick, the S&P. We talked about this right here being this fake out. Don't you kind of feel like it's going to be a fake out? The news comes out and pulls it back. That's exactly what's happened in the meantime, so hopefully I helped you avoid that. The S&P is still very much inside of this range. We now have ourselves the beginnings of a fake breakout or a false breakout there, so something to pay attention to. I'd like to talk about the NASDAQ here real quick. 188 points of what happened today, of the 300 points, came from, actually now it's more. The 201 points actually is all NVIDIA. The rest came from Microsoft. So was this a broad market, like index buying, every stock going up kind of a day? Absolutely not. We can take a look and actually see NVIDIA represented at the time that I pulled this, which was like 3:30 Eastern. NVIDIA was responsible for 187 points. Microsoft was responsible for 72. At that point, the NASDAQ was up 241 points. Close enough, right? That means that all of this accounted for the entire day's gains, and the rest of it pulling back was just some of these little small down days for these stocks. But that is not a broad rally. That means that when you start looking at this NASDAQ, we are going up on thin air. NVIDIA now, and of course we have to touch that, NVIDIA now hyperparabolic, meaning it's priced to perfection for the future, not for today. And so any pullback there pulls back, look, for God's sakes, it was up 24% today. Even a 10% pullback, you'd be happy as a pig in mud. If you bought that the other day and it's up 24% today, you got a total like 35% gain, and tomorrow it falls 10%, big deal, right? You still got a nice healthy profit, but that will weigh on the market. That's going to make it really, really tough there. The S&P is actually very, very similar. Let me pop on over here real quick. Two stocks that drive basically the entire, what was the entire rally here today. That's the same two names, right? 22 points for NVIDIA at 3:30 anyways. Microsoft, 11 points. We got a whole 32 points. That's close enough. Those two stocks did the same thing. I want to point out that six sectors were actually down today. Was it a broad S&P market kind of rally day? No, 6 of the 11 sectors were lower, and only one sector managed to gain over 1%. That tells you that the other 4 sectors that were positive for the day were just barely positive there. Only tech gained over 1%, actually gained about 4% there. So careful, careful. If we look at the Russell, it actually fell today and almost back down to these lows. Small cap value, small cap index, small cap growth all had a weak day today. So the underlying market sort of just had a ho-hum day. You know, it was not bad, not great. It was just like, it's Thursday. You know, I don't know, what do we got going on? So careful, careful there. It would have been a slight positive day, which, by the way, is exactly what we should have had, right? So here's the average return for the by day for 2023 so far. Thursday, what do we normally have? Slight up day. It would have been exactly this for not Microsoft and Nvidia. 2 stocks changed the tone of the entire market. I despise that there. That is very difficult. So let's talk about it. Nvidia, right? We've already seen the chart. Obviously, they had a great day. One of the best performers today. I will start by offering up a comment. I believe it was Lenin. Someone tell me if I'm wrong here. That there are decades when nothing happens, and there are weeks where decades happen. Remember that one? It always stuck in my head, and I hope it was Lenin because I want to give credit there. But in this case, if you look over at the chart, a decade happened in 15 hours, right? 25%, just like that. 1/4 of its entire value happened since the prior close and into today. A whole 15 hours there when we opened up there. This move here for Nvidia, the amount of increase in its current value is the equivalent of a Boeing and a Microsoft. Not Boeing an airplane, Boeing the whole company, and not Microsoft, Morgan Stanley. Those 2 companies are worth the same amount that this gained in value today. Massive, massive move there, just to try to find some way to put this move into perspective here today. Revenue and guidance, of course, earnings came out, right? Revenue and guidance was guidance on revenue was $11 billion. It's like $4.73 billion now. So they guided more than 50% higher, right? That means that their data center business, which is kind of the hint that I gave you earlier, their data center business will literally double in size. You're talking about a behemoth business already, and it's going to double in size. Ask yourself, if you were to invest in Nvidia right now, do you think that the future holds a continuing double in value, double in revenues, double? No. All that growth and then some was priced in today. Very difficult for that growth to continue. And that's with little competition, or somewhat little competition. So their margins at 60%. Profit margins are like 66% or something. Can that continue with AMD and what Microsoft's doing, and of course the rest of them out there? No. Is it going to be Nvidia just dominating forever? So for now, celebrations, party hats, all that stuff, but you are paying for way down the future, operational excellence and no crush in their margins, no real competition. You're paying essentially a price that means these guys are going to run away with it. It's a tough one. It's a tough one. So I spent a little more time on that one here today because obviously it warrants it. I'm not bashing on them. That's a heck of a move and great job. But be very careful. We spend so much time, I was telling my friend this earlier, I have used this with you guys before, but I'll change it up a little bit since this is a repeat. You will go to the grocery store and you will like bombard the blueberry department. You'll move the little boxes out of the way. You're looking for the perfect set of blueberries. You're not paying $4 for a crappy set of blueberries. You're going to move it all out of the way, go to the bottom, look at it, no mold. These are nice and fresh, got a nice sound to them, and you do that for $4. But when it comes to something like Nvidia, you're like, I got 10 grand, man, let's do it. It's up today, let's get in. Again, do you know how Nvidia drives that AI profitability? What percentage of their business is AI profitability? And what's the likelihood it continues? Like, sift through the blueberries a little bit, right? Figure out what the best ones are. All right, anyways, that's that. Tonight, Jazz After Dark, we're going to talk about answering some questions. How does this debt ceiling thing work? I'm going to take a lot of questions that I've got from clients that were really good questions, and I'm going to go through one by one. In particular, how does it work? Why is it there? Why don't we just get rid of it? What's the point of this? How does Congress even have to deal with this? How do they come up with a number? So real quick class, we'll do that one. And we've had some great Jazz After Darks lately. Can you buy sunscreen with your HSA? Stemmed from a question here internally. Can it be done? Lots of good stuff. I'm going to pull this out here and put this on this side so I can answer some questions and see what we can do. Chris Pike says he looked it up. It was Lenin. Great. Perfect. I had thought that, but slipped my mind for just a moment there. Swamp Rat, when am I getting my blue suit? I'll tell you, I saw some very sharply dressed people over the last couple of days. You know, I'm pretty secure in the masculinity, but numerous times I point out to Eric, that guy's got it together, man. That is a hell of a suit. Wouldn't fit the same on me, though. I'm sorry. Just wouldn't work there. Germany did officially enter a recession in time to add to German companies. Why? So I'm not picking on you, but why does the labeling of a recession mean it's time to buy stocks? Oh, let's play the U.S. game. If we ever label the U.S. economy in a recession again, why would that be the moment to buy stocks, right? I think we've done some publicly, but I've done a lot of classes for clients to show that equities, doesn't matter if it's U.S. or China or whatever, equities actually have already bounced by the time a recession is announced. They've already put in a bottom, they've already taken off and done their thing. So it may be an okay time to buy, but just because it has that label attached to it, I wouldn't make me go change things there. Yep. What was the main takeaway from the conference there? For me, it was watching people take really broad topics, things that they wanted to do in their business, and how they sort of simplified it down to one thing for one department. One thing for one department, and then actually build to the big picture item by tackling one thing at a time. I'm very bad at that. I have a billion things that I want to do at a time, and it all aims towards the big picture, but some of it really never gets done. So I thought that was really cool. It was a very calm approach to organizing your life so that you maintain your sanity there. Yeah. Doc says you blow your minds on what you do here at the Jazz at the conference. Not sure what that means, but I appreciate what sounds like a compliment. Thank you. Since tech ETFs have went up so quickly this year, would it make sense to sell off a little bit? Okay, let's do it like this. We know that Nvidia dramatically moved tech-based ETFs today. If you owned Nvidia at any point prior to today, you have to think like something's got to come off, right? Or at least be planning for it. You don't have to do it today, but like you've got to think like, what were you hoping for? Like, how much better do you think it could get? Presuming you were an owner somewhere in here or really anywhere, you go, okay, no way you bought that stock and you were expecting 50%. You know, you might have been thinking if you're a trader, 10%, 18, something like that. If you're a longer term investor and you're anywhere in here, you just got your long-term profit faster than you were supposed to. The trap is you look at it and go, oh, maybe there's more. Yeah, very much so, but not from here. I can tell you right now that stock will not replicate what it has done from this very moment in time. It will take a break, it will slosh around. Some days you're going to feel like you missed it, some days it's going to feel like the end. It will do that before the next major move higher. So I would say absolutely there. Hey, Dustin, thoughts on a trade wheel if assigned? All for it. If you get assigned, that means you're playing defense, and you play defense and you fight like that person's trying to take every dollar from you. You play the game until you can't play for a credit anymore, is the short answer. Jeff Parker, hello from Charlotte. Actually, me and Eric were thinking of doing some jazz tours, like the tour of Texas, go meet clients, meet new people, and Charlotte came up on my list as a place I want to go, so maybe we'll be seeing you soon, now that we can kind of get in and out to these places here. So that would be cool. What do you think of Alibaba's spinoff there? Yes, that is happening and has their approval, by the way. Will Baba give out a special dividend like that? That is what the game plan is. It hasn't been determined yet, that I know of. And this last time I looked and did any real research was Wednesday of last week. So that may have changed there. Oh, I would love to go to China. I have so many good friends in China, just from my previous sort of work. I would love to come over there, not only meet you guys if you're there, but to meet all of them. Really good people in China, like to have met them in the masses. Really good people, so it's kind of frustrating to watch the governments duke it out, right? It's like the kids, right? Our governments are fighting, but the kids are like, well, we can go play in the sand if you want, and it turns out like most of them are just like us. Most of us are great people, right? Yep. Hello, Eloy. Ohio, nice. I mean, if there's anybody in the Sandusky area, I'm not opposed to visiting Sandusky or, Columbus, between there somewhere. That would be pretty sweet. All right, I'm going to wrap it up there and get on out of your way. Appreciate you guys hanging out with us tonight. Jazz After Dark, 7 o'clock. If you want to learn about the debt ceiling stuff, doing kind of an overview of everything. And if you're a client, we're also going to be posting the really in-depth view of our analysis and sort of all the data we're using to derive a case scenario of what could happen and why. To kind of show off some of what we do on the back end. It was a request, so we'll take a look at that. All right, we'll see you, and thanks for joining.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.